Geodrill is a drilling services company for the mining industry operating in West Africa, Egypt, and South America. Geodrill just released its quarterly results with record revenues and EBITDA. We've got CEO Dave Harper here to review the quarter and provide an outlook for the rest of the year and beyond. I'm Martin Gagel with Market Radius Research. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Dave, congratulations, an excellent quarter. Thanks for joining us to give us an update. Obviously, it was strong. What maybe pitch out a few of the key numbers that you did and what's driving this continued growth?
Well, thank you for having me again, Martin. So, yeah, we put out our first quarter yesterday. We achieved outstanding results. We set new records in terms of revenue and EBITDA, and we were just shy of a net earnings per share, just shy by 1 penny. So, you know, the numbers are a testament to the strength of our strategy, which is working evidently. And as these results, you know, they speak for themselves. Just to recap, just quickly, achieved record revenue surpassing all historical benchmarks, which included 2 record-breaking months, one after the other, February and March. EBITDA was a more than 100% year-over-year improvement, and earnings per share, a year-over-year improvement of just over 160%. So, as I said, we're a penny shy. We put out 12 US cents in per share in earnings. The results significantly, and we also improved our balance sheet significantly, ending up with a total shareholder equity result of $125 million. This was up 11% year over year. And so, yeah, great results. What can I say?
And just to reiterate, make sure everyone realizes, like, the share price is quoted in Canadian dollars. All your financials are in US dollars, right?
Correct. That's correct, yeah.
Yeah, so add another 36 whatever plus to those relative metrics, and yeah, solid. One of the metrics of yours I always like looking at is your utilization rate, and you went from 65% last year to 75%. And I'm guessing, and I'm pretty sure that when you increase that utilization rate, you get a lot of torque, call it, in your earnings that really juices it up. But you're getting close to 80% is kind of the peak that you can get your utilization rate to, or how high can you get it up?
Well, the average through the quarter was 75%, but in that 3 months, we had 2 plus 80% months. It was an 81 and an 83. I think January's always a bit quiet because we get the folks coming back from Christmas. So generally, nothing really generally happens until the back half of January. So taking that into account, it was actually an exceptional utilization result. For the record, 75% is effectively full utilization. You can imagine that of the entire fleet, not all of the rigs can be working because there's always going to be a portion of the fleet either in the workshop, possibly on the back of a truck mobilizing to a job, or stuck in customs, or on a ship somewhere. So 75% is as good as the industry actually gets. So we're actually leading the world at the moment, the drilling industry globally, with the strongest utilization in the world.
All right. And you ended the quarter at 98 rigs, adding 3 rigs in the quarter. So we're just 98, 2 shy of 100. Normally you don't give any outlook on that, but it doesn't seem like it would be shocking if you hit the 100 mark this year.
Yeah, no, I think it's a bit of a no-brainer. I can almost assure you we're going to hit 100 rigs this year. Yeah.
All right. And these are the corporate-owned rigs. Do you rent any rigs or supplement your fleet with other ones to help things out?
So we currently have 1 rig leased. So we have 97 rigs which are owned by the company. And we have 1 rig which we're currently leasing. And that was because we started a contract a while ago. We were short of rigs, and the client wanted us to rent a few of their rigs. And we've since given 2 of those back, and we just rent the 1 now and by attrition that'll drop off.
And the customer base is obviously, we have, especially in the gold side, which is so strong in such a huge portion of the market in West Africa. Everyone's drilling, trying to capture these high commodity prices. Can you just give us, I don't know, a little bit of color onto what your customers are doing, how they're executing their drilling plans, and how you fit into this?
Well, gold's very solid at the moment, and so our business is largely, in the last months and years, say the last 18 months, we've been repositioning our refleet and our operations towards drilling for well-financed mining companies or well-financed, junior exploration companies with, very advanced projects. And so a lot of our business is gold, as you can imagine. Gold is doing very well at the moment. 3,200 and change is a record high. And so about 90+% of our business is at the moment gold. And with the gold miners, what happens is as they mine gold, they have to replenish. And so the business continues to generate more business for itself. As mining companies mine more gold, they drill for more gold to replace the ounces that they've just mined. Then there's the copper side of the business. Well, that's the South American play. You recall that we moved into South America a few years ago, and we did our penance for a couple of years. We've figured out how it sort of all works out there now. We've had a fairly solid uptick in terms of contract wins in recent times, and those contracts are now starting to generate solid, robust revenues and profits. So South America is a copper market. Copper's doing very well as well. So the two things that are doing very well at the moment are gold and copper. And we just happen to drill for just the two of those things.
And you mentioned South America. A little more color onto how that market is doing for you, as it's still relatively new.
It is a relatively new market for us, and it's going exceptionally well. It's actually speaking for the majority of our growth at the moment on a percentage comp basis. Most of our efforts are being focused on a South American expansion. And the plan there is, well, as you know, I think it's fair to say that Geodrill's been a very successful brand in Africa, very well known, strong reputation, very well recognized, reputable firm. South America, if we can mirror that same success, then effectively we'll do very well. So the focus really is, I think we've got in our portfolio of business, I think we've got enough gold going on. If there's any gold business for us to expand into at the moment, it is the Middle Eastern market, the Egypt market, which is also going very well for us. And you recall that we actually recently expanded by registering a company in Saudi Arabia. That's still very early days, but at this point we're boots on the ground. Sorry, we're registered. We've got boots on the ground not too far away in nearby Egypt. And so it's as simple as just mobilizing across the border to work in that country. But as we speak, we actually are inundated in the existing markets that we're in. So we wouldn't have any spare equipment for Saudi just at this point in time. It'll be a good problem to have when the time comes. Yeah.
And you mentioned your business, much of it or all of it comes from large established mining companies. So you're not doing drilling for the little juniors, like trying to find a discovery. You're working with the producing miners, and they're trying to fill out their resource and make sure they've got enough assets to mine out as they continue their production in it. And they're all trying to ramp up production as fast as possible, make sure they get some good grades here with such a strong gold price. So I guess the question is, am I right in the that it's not sort of pure exploration, it's expansion drilling, call it, that you're doing for your clients, and that's the majority of the work you do?
It's a large chunk of what we're doing, yes. Essentially, we don't mind. We're agnostic. We don't mind working for advanced juniors. We don't mind working for senior miners. We're very happy to work for either or both. Um, but as long as they can pay us,
Okay.
that's not an unreasonable request. And so the thing really is that our gold mining customers are producing gold at $3,000+ an ounce, and they've got all-in sustaining costs of about half that. So they're printing cash. So it just happens to be by virtue of that who is keeping us very much busy at the moment is the very profitable senior miners.
And the programs you're doing with the miners, are they kind of month to month, or do you have them? Do you have good visibility out onto the next, let's call it the remainder of the year, or how much visibility do you have with the work you're doing with the gold companies?
Well, therein lies the opportunity. That's the answer to the question, is that working for the senior miners, they tend to the contracts tend to be longer term and higher volume and require multiple year type approach. And so that's immediately attractive for us because it means that basically we can just put an economy of scales approach, more rigs operating on one site and less downtime between contracts means that we've just got a continuity of recurring revenues, which is ultimately what drives, well, it ultimately drives utilization, which ultimately drives revenue. So there's a direct correlation between that high utilization and high revenue numbers. So you saw that we just put out record revenues. Well, that was on the back of record utilization of the enlarged fleet. The fleet is always enlarged, always growing. And that was on the back of record productivity. So mineral drillers are paid by the meter. So the objective for us is to drill as many meters as possible, be paid by the meter, and as a natural function of that, revenues grow. And as those revenues grow, once you reach certain thresholds, the thing within that cost structure is that a certain portion of your costs are fixed costs, and so if you defray those fixed costs, G&A type costs across a larger revenue base, then you become more profitable. So the EBITDA number that we produced on the back of simply higher revenue in this quarter that we just announced yesterday was 28%. That's I'm not sure how many other companies you'd have that you're talking to that are producing 28% revenues out there. Maybe startups with, where they don't have competition and things like that. But this is a business with 26 years of history in an established drilling market with competition. We have plenty of competition, and yet we're able to still produce those sorts of results.
Obviously, very strong quarter. Should we expect this sort of growth in the coming quarters for the year? I know you're not giving specific guidance, but any sort of outlook or anything to sort of guide the direction of the type of growth investors should expect through the remainder of the year?
We don't give guidance, but what I'm happy to do is say that our analysts, as a result of yesterday's very strong numbers, they have, as a function of the results, have revised their targets. And they're basically forecasting that our quarter two will be fairly similar to our quarter one, and that the back half of the year will also be strong, not as strong as the first half, as historically it never is. The majority of our work usually occurs in the first half of the year, and it tends to taper off a bit in the back half of the year. It just does because of seasonality and various esoterics that we deal with in the industry. But they're saying, analysts are saying that this year we're targeting double-digit top line growth, and a solid EBITDA margins, 20 plus 24, 25% EBITDA margins. I would say that I'm comfortable with where the analysts are forecasting. Yeah.
Dave, thank you very much. A great quarter, great update, and I'm looking forward to see how the rest of the year rolls out. Thank you very much.
Thank you. Cheers. Thank you.